It's me, NYC Einstein from the Florida New York Stock Exchange. I am sorry you've missed me for the last few days. I know you missed me like crazy. Anyway, let's do a little recap of January. January, coming off of the Christmas Eve day lows, was significant in every single respect. From Fed transparency to earnings coming into the market, fresh money coming into the market in January, China, trade. There were ups and downs, but the market rebounded in a huge way, up 12, 13, 14% from the lows in the S&P and the Dow, and across the board. In the screen today, we closed out the month up, the largest rallied month since Jan 18. That's what they're saying. I don't know if that's possible, but that's what they're saying, so let's believe it. A huge oversold position back in December off of the careening wild markets coming in from October, and January came in like a boom, like a lion, and the market rallied in a lot of respects, off 21.5 I think in the Dow, 24 and change in the S&P. We are here today at 25,000. We've recaptured that incredible level. In the S&P, the 2,700 level, we've maintained and recaptured that level. So these rebounds are big, they're fast, they're furious, and it was a great month. If you bailed in December, I'm sorry for you. If you got back in January, I'm happy for you. If you held and are back on the road to recovery, that's a good thing. Don't get emotional about money, Gordon. Just remember that. You're in it for the long haul. You're an investor, not a trader. If you're a trader, you got to take it a day at a time. Do take profits. Do not sit around waiting for unacceptable losses. And when everyone else is selling, you buy. When everyone else is buying, you sell. Stick with me. That's the game of the day. It is Feb 1. Dow Jones at 25,050 points, up 65 points. The Russell up an odd lot, S&P up an odd lot. Oil on a nice rebound down from the 40s, up $1.58 on the day. Transport's up 65 points. What is on the agenda? Where is this market rally coming from? Today's news with the unemployment numbers, regaining 310,000 jobs in an economy and in a market which had a government shutdown. That would have affected it. But we revised the numbers from the month before, and amazingly enough, even with the shutdown, there were jobs gained in the month. They've got the labor force increased in the month, the hours worked increased in the month, and the hourly wages increased in the month. All good, on fire, firing on every piston. That's what took the market up. We've had earnings pretty much across the board that were sizable. That was another thing. We had a Fed meeting earlier in the week that was incredibly transparent, talking about the unwinding of the balance sheet being a positive thing that would actually be a stimulus package where they wouldn't be sending big, large quantities of money into the marketplace to unwind the position. They were going to let them expire and start buying the bonds back. That's a good thing. Talked about none of the policies is going to be on automatic pilot for the coming 2019 quarters, that they were going to basically, the economy was good enough condition to warrant no more interest rate raises unless something was going to happen. The economy was in good shape. Consumer confidence, okay. So that was good. The conference by Powell, the press conference by Powell could not have been better than you expected. It was basically a box of chocolates. Whoever wanted something positive about it could have gotten. So that was good, some positive earnings report. And then we've got the three things that could have caused us anxiety, which probably caused a bit of that weird 400-point sell-off earlier in the week, were the ones that turned out to be okay. Your worst fears are never realized. China trade deal on the table, looking good. Interest rate raises off the table for the next couple of quarters, all things good. Unwind of the balance sheet, sort of in a solid posture. Earnings are actually, some of them better, Apple better, a couple of them better, Boeing better. These are big movers. So at the end of the day, we've ended January in a good position. We started February in an okay position. It seems like we are fending off some of the points of anxiety and hopping on board this train. There are catalysts to buy this market, and that's what we're seeing here in the beginning of February. We're breaking out above the 25,000 in the Dow, breaking above the S&P. We'll see. We're not sure about that. I thought that was happening up 200 this morning. Felt like that, but we did sell off. There was a little profit take. We did not see profit taking coming into the end of January. They took them, they bought them, and they bid them. So let's see where we go with this. We need a reason to step up from this level. Are the bulls in charge or the bears in charge? We'll see. It's up from here, down from here. Those are the two choices we'll know once we really start into February. We'll know that on Monday. NYSE Einstein, Inside Verse Top. Stick with me. I'll see you tomorrow. I'll see you Monday. Ah!